When I was invited to deliver a lecture on this particular clause on 44 AD, so I thought there is hardly anything. There is not much to discuss. But when Gupta ji said it is the heart of the tax audit, so actually really I am surprised. But I'm assuring you that is not that much difficult. So did not worry. I'm searching the keys, different keys. So 31st March 2022 balance sheet was the first balance sheet where last year was the first year where we are required to put the various expenses and consider clause 44. So this is the second year. So I think I will be able to complete in half an hour, not very lengthy topic. Now, first of all, we are carrying out tax audit, which is an India income tax concept. So it may happen that a particular assessee will have only one PAN number, but he may have more than one GST number within the single PAN. 95% cases there will be only one PAN and one GST, but it is possible that there may be more than one GST number. If there are branches all over India, there are branches of a company, then as per GST law, for each state, separate GST number is required to be taken. So it may happen that there may be 28 branches all over India, and there is only one PAN. So in such case, the GST expenses of all the 28 branches will have to be merged and is to be reported under single PAN in single GST or a single VAT or single income tax audit report. Then, see, I have taken this PPT from the guidance note issued by the institute. Now, I tried to search. I searched, but no clarification is available from the income tax department. How to proceed or what is exactly is required from the assessee or from the auditor. So such thing is not mentioned anywhere under Income Tax Act. So in these circumstances, we have to follow the GST law. So whatever concept of dealer or any concept will take the GST concept instead of Income Tax Act. Now, obviously, if the GST number is not there in case of a particular assessee, suppose an assessee is a doctor, is providing only health service and holding degree, medical degree, so GST is not applicable to him, but tax audit may be applicable. So even in such cases also, one has to find out the expenses and will have to provide the bifurcation in clause 44. Lawyers, general lawyers are registered under GST law because the service is exempt for the lawyer, but they have to take the GST number and provide the detail in GST R1 return, etc. So most of the lawyers are registered, but sometimes some lawyers may be unregistered or goods transport operator. Generally, goods transport operators are registered. Now, there is a belief that transport operators are not required to take GST number and not required to pay GST tax. But let me clarify that when goods transport operator is providing service, transport service to the registered GST registered customer, then he has option whether to charge GST or not to charge. But once he decides that I don't want to charge, he will pay under RCM, then for the whole year, he will not charge. But when goods transport operator is providing service, transport service to the non-GST holder, then GTA, goods transfer operator himself has to pay GST, collect and pay. So in most of the cases, he might have provided GTA service to some during their some non-registered assessee, non-GST assessee. So technically, he is liable to take GST number and pay GST. Otherwise, also he is required to provide the details in R1 return invoice wise and submit nil to nil, but submit the nil 3B return. So all in all, there may be some lawyers, some GTA, and most of the doctors unregistered under GST Act. But still, since they are required to have a tax audit, so details will we have to find out the detail and provide it. Now, total expenses, we have to find out almost all the expenses. On the left-hand side of the profit and loss account, we have to total up the expenses and we have to provide the breakup. Now, if you look here on the table, so first of all, total expenses, we have to gather all the expenses, almost all the expenses. There are some expenses which are not treated as expenditure. It may be expenditure under Income Tax Act, but not under GST Act. Except those, all the expenses are to be gathered. And once the expenses are gathered, then we have to bifurcate into expenses. Find out the invoice copies, find out the GST number on the invoices, purchase invoices or supply invoices. And if it is provided from registered supplier, then it is registered, otherwise unregistered. So first we have to segregate registered or unregistered purchases or services. So we have to bifurcate first. So here serial number 2, called the total expenses accrued during there, means grand total. Then extreme right hand side, column number 7, expenditure relating to entire entities which are not registered. So from total, first of all, you segregate the unregistered and you separate it out. So balance will be registered. Now those registered purchases or registered supplies, registered expenses, again are to be bifurcated into 3 categories. 3, 4, and 5 in the column. The third column says that expenses which are exempt from GST. We'll discuss what is exempt and what is not. Some of the items may be exempt. So find out those exempt items. Then second, and purchases or supplies which are provided by composite supplier. So that is to be segregated. And balance, other than the exempt, out of total registered, you segregate exempt items, you segregate supplies from composite dealers, and balance is to be treated as balance item registered. So 3 bifurcations: exempt supply, supply from composite dealer, and registered purchase. That's all. Then 3, 4, and 5 total, you put in column number 6, and total of 2 and 6, total of 6 and 7, grand total will come again in column number 2. Now, what is composite supply? Now, GST law has provided one composition scheme to the small dealers, small service providers. Now, service provider, exclusively service provider, whose total value of supply, if it is less than rupees 50 lakh per annum, per pen, means all over India. If it is less than rupees 50 lakh, then he can apply for composition scheme separately. He can offer composition scheme. If he offer composition scheme, he has to pay only 6% GST instead of maybe 18% tax, only 6% tax. However, on purchase side, on services received by that supplier, he will not get the input credit. That is one composition available to exclusively service provider. Then, as far as supply of goods is concerned, trader is concerned, manufacturer, wholesaler, retailer, one separate composition scheme is available. If the turnover is less than 1.5 CR, 1.50 crores, in the previous year or in the very first year of taking the GST number, then he can apply for composition scheme separately and it will be available. So such supplier of goods will pay only 1% GST instead of 5% or 12% or 18%. Just he has to pay 1% tax. And on purchase side, whatever he might have purchased, obtained services on which input credit is not available. Then one composition scheme is available to restaurant. So restaurant category will cover everything, restaurant or hotel or eating house. Then maybe dharmsala or sanatorium supplying food also. Then canteen service, tiffin service, etc. Everything comes under hotel category. So hoteliers, there is no turnover limit. They need not apply. They have to pay. Sorry, they can, if they can apply, they can take the composition scheme. No turnover limit. They have to pay 5% tax. And on purchase side, they don't get input credit. So right now there are 3 composition schemes are available: one to restaurant, one to provider of service, and one to supplier of the goods. Now these composition dealers in their invoices have to mention, have to print or put a rubber stamp or put a handwritten. They have to compulsory write that composition, the word composition dealer. So when in invoice you find that the word composition dealer is mentioned, that means it is a composition supplier and mentioned in column number 4. Any questions, queries up to this stage? Anytime you can raise the hand and ask the question. Need not wait till the completion of the lecture. So total purchase, you segregate into registered and unregistered. Unregistered you mention in column number 7. Registered, again 3 categories: exempt supply, composition supplier, balance other registered supply. So total of all 4 will come in column number 2, total expenses incurred during the year. Now there are some exclusions. Now one item expenses on debit side is depreciation. So depreciation is not an expenditure item, it is a provision. So purely it is not a service taken. So it is not an expenditure, it is just a provision. So depreciation figure is not to be considered while totaling the expenses items. Then one is remuneration, salary and wages and bonus, etc. to employees. So employer-employee relationship, actually, theoretically, employee is providing service to the employer and employer is paying salary. So it is a service provided by the employee. But GST law itself says that remuneration given by employer to employee is not to be treated as service. So that is why it is not to be considered while totaling the expenditure. Then one question, whether only profit and loss item are to be considered expenditure or balance sheet items. Yes, answer is yes. Even balance sheet items, addition to fixed asset and corresponding expenses incurred on addition to fixed asset will also have to be considered while totaling the expenditure. So addition to fixed asset, etc. are also to be considered. And sometimes provisions may also come, depends, in the expenditure items. Particularly in case of builders and developers. Now, builders and developers, what are the accounting standards? Accounting standards says that until the builder gets occupation certificate or say completion certificate, till that time, those expenses will be accumulated and will be shown as work in progress. And once the builder get OC, customer get the possession, at that time, the WIP, etc. items will be segregated and revenue will be shown, expenses will be debited, etc. So even in case of builder, every year expenses are accumulated and shown in WIP. Even in that case, in those cases also, those WIP items are to be find out and to be shown, considered as expenditure item as per the clause 44. This is not capital capital item. Even work in progress, etc., are to be considered for 44 AB. There's certain, yes. No, pardon. Import of service and import of goods. Actually, I suggest that import of goods is a purchase of goods. So purchase of goods should not be considered under clause 44. Services, as far as services, it may be an expenditure item and should be considered as expensive. Pardon? RCM basis also, yes. Suppose it is shown as purchase of goods, then that should not be considered. But expenses on RCM item, there are a couple of main items which are to be considered for RCM. Generally, that comes. One is payment, legal fees, payment to advocates, not legal fees, but strictly payment to advocate. And one may be payment to transporter. Those items may come in expenditure side. And there are a few more items which are subject to RCM. So those are expenses items. So service which is provided and service which is taken is taxable item. So it should be considered for clause 44. Any further question arise on my explanation? So these are to be considered. Salary. Remuneration to partner is also not a service. It is as good as salary. So should not be considered for clause 44, definitely. Even interest item, interest on loan or interest paid to partner for capital introduced, etc., is also not to be considered. It is not a service provided or it is not a good supplied. Interest on GST also not to be considered. GST, payment of GST tax or interest on GST payment is not to be considered because it is neither service taken nor purchase of goods. Penalty also will not come. It is not a service. You keep on asking question, I will keep on replying. So there, yes. Settlement with the employees. Full and final settlement. Sometimes there may be some dispute and you settle the case. So that is considered a service because it is not arised out of the providing for that the salary. It is not arise out of the regular course of providing service by the employee to employer. So that is why GST law itself says that such amount will be treated as service provided and service taken and should be taxable. So that is why tax is to be considered and it is taxable service and should be considered for clause 44. Some of the things are strange, but one has to digest it. Yes. Actually, expenses are to be considered, not the purchase of goods. Right, short service. It is a supply of service. So it is an expenditure. So it will be debited. Some payment is made to employee. It will be collected from employee. Okay. Some amount is collected from the employee for short supply of service. He did not give the notice. He left the service before notice. So company will levy penalty on the employee. So employee will give the compensation to the company. So it is an income for the company. And that is taxable income for the company. But it is not an expenditure item for 44, but it is an income. So also reverse also may be the case. Employee file a case against the company and companies settle the case, settle the matter out of court or etc. and make some compensation to ever. They remove. See, even if employee is to be removed, then there may be some condition that 1 month notice should be given to the employee. And if employer remove the employee without 1 month condition, then he may expect compensation and employer may give compensation. That is an expenditure to be considered for 4480. It will be taxable service provided by the employee, taxable expenditure. Bank interest, GST law itself says that it is not a providing of service. So not to be considered interest amount. Any interest, bank interest or financial, any financial interest. Pardon? Salary is excluded. Now that is settled, almost settled. GST law has considered this is taxable event. So you digest it as a taxable event. It's not a service provided by employee in the regular course of business, something out of the service area. It's something out of employer-employee relationship. So better consider it, digest it and consider it as separate thing. And ready to pay tax under GST Act. Right. Transport. Yes. Almost all the expenses are to be reported, except the few exclusions. That is, one is a salary, or one is a interest, depreciation, etc. First of all, you have to consider everything is to be reported, and from that total, all expenses, you have to weed out one by one few expenses. Trading account generally it is consists of purchase of goods for trader or manufacturer. So purchase of goods is to be ignored. It is not an expenditure debited to. Yes, reported. Sometimes it may happen that you purchase a machinery and some expenses incurred on machinery, generally under income tax that we capitalize it. Expenses related to purchase of machinery. But those such small expenses are also to be considered for 4480. Expenses like transport expenses, sometimes freight charges are added to the value of goods, maybe. But for 4480, it is an expenditure to be considered separately for reporting. Leasehold property. No, leasehold property cannot be purchased. You pay lease tax every year. Purchase outright.
So A party has got the allocation of leasehold property from MIDC.
MID for say 99 years, for example.
Yeah, 99 years.
And made some lump sum big payment.
Correct. And party B
so it is capitalized.
But party B is purchasing from party
A. Right.
So that leasehold, it's not very clear. GST is to be payable on. So how do we disclose that? The payment made for that.
What do you think? Leasehold enter, is it a capital expenditure or is it capitalized?
They are
and whether GST is offered?
It's supply of service according
supply of
to GST.
Service,
Supply of service.
It is a supply. It is not a purchase of property. Now, one thing you remember that purchase of immovable property, maybe land or maybe building. There are two things which are immovable generally. So purchase of immovable property, sometimes maybe entire plant also embedded to the earth. So immovable property, GST department or the law is cannot levy tax. It is not subject to tax. So no tax. But other than this immovable property, there may be two more types of immovable properties which are subject to GST. One is under constructed property and one is, as he said, leasehold or pagdi ka jaga. Sometimes we purchase premise on pagdi basis. So it is not a purchase of premise or it is not a purchase of land, leasehold, as per the GST law. So GST is required to be offered on leasehold land also. Now, if the leasehold land is capitalized, then I think it is not an expenditure debited to profit or loss, section 4480. And generally it is capitalized. It is taken for longer periods, say 99 years, and very heavy, big payment is made for that leasehold rights. It is called leasehold right, and it is generally capitalized along with the GST tax. So if it is generally it is a capital expenditure and capitalized, so it should not be considered for 4480. It is not an expenditure. Similarly, under construction a premise also. One keep on making payment step by step as demanded by the builder, and we keep on making the payment. So that is also property and it is generally capitalized. That is also considered as purchase of immovable goods and not a 44 AD, clause 44 expenditure item. Right, right. That is totally is to be excluded. It is not to be considered for column 2 also. So whatever is profit, see, you take out the balance sheet, profit and loss and balance sheet, and you from profit and loss item, all items, you have to prepare one separate list, which items will be considered for clause 44. So the total expenses have, from that you may remove interest item, you may remove salary also, you may remove bonus also, and some items you may take out for inclusion from the assets also. And you have to first prepare a total list, total expenditure for column 2. And thereafter you bifurcate total into RD, URD, and thereafter bifurcate RD into exempt, composition, and balance other expenses.
Then it will not tally with the profit and loss account.
It will not match. It
Then-
will never match.
Then we will
So in
be-
profit and loss, there may be 1 crore, but for 44 clause, it may be less than 1 crore, or sometimes maybe slightly more than
Then
1
they will
crore.
issue the notice. Your expenses are not reconciling.
No. Reconciliation statement you prepare for your internal working. But in here, under Income Tax Act, a tax audit report, one did not report the reconciliation. Just put a total figure. And if the income tax from where you are out the figure, so you should have reconciliation statement ready. Or if you are worried, you can put a note that some expenses like this, and these are not considered as these are not forming a part of expenditure under clause 44. But that is obvious, need not even put a clause or put a remark also. Yes. Yes. There may be, yes. Yes. Yes.
The guidance may be taken from the heading of the table, which states that the word breakup
Yes,
of
yes, in the
expenditure,
guidance
hence
note
the
it is written.
total expenditure, including purchase, the format given.
Total expenditure, sometimes some expenditure you may find in purchase items also. So that you have to weed out for clause 44. But outright purchase for trading purpose should not be considered, definitely. Only expenditure. That's all.
So you mean to say purchase is not an expenditure?
Expenses items sometimes involved in the purchase of goods. That is to be find out. Freight charges, etc. And that is to be considered for 4480. Pardon?
Exactly.
Yes, sometimes sometimes it may be confusing. Yes.
Yeah.
That should not be considered. That should not be considered.
Sir, it doesn't seem to be
82.7 said
excluding-
that the value of all inward supply of goods has to be considered. So all inward
But-
supply of
but
goods
no.
means.
No, supply of goods is not an expenditure, definitely. Should not be considered. This is my opinion. And I am confident that this will be the opinion of all the GST experts or maybe everybody. This is not to be considered, definitely.
Sir, one more question on the earlier table which you stated. I'm just envisaging.
I stated because it is mentioned in the guidance. Guidance
All
note.
right. I'm just pointing out at the table, the basic format of a reporting.
Okay.
So I'm just envisaging a one
This
situation.
table?
Yeah,
Yeah.
I'm just envisaging a situation. Let's say
Yes.
I have a supplier which was given me a bill along with the GST, but I have not taken a credit of it.
Right.
How should I report it? Should I report it as an unregistered?
Definitely.
I don't have anything to do
So
with
first
that
you have to
ITC.
find out whether it is an expenditure.
Yes,
Yes. Then whether it is taxable.
yes.
Yes. You have to report. Thereafter you have to bifurcate
So
whether it is
whether
RD,
whether
URD,
I have claimed ITC or not,
Yes,
that is
yes.
irrelevant.
irrelevant.
All right, thank
You
you.
have to consider.
Sir,
Now next question may arise whether we have to consider expenses with tax or without tax. I think it should be considered with tax or without tax. Yes, it is shown in the profit and loss account.
So,
Sir, supply under RCM where to show in this column?
So find out the supply, whether it is taxable supply. If yes,
It's
Then
under RCM category.
agree, but RCM may be of two types, registered, unregistered. Some
So-
transporters may be registered, then registered
But
supply.
if it is under RCM, we are
So
not
So what?
looking ki it is registered or unregistered, then how?
No.
to sh-
No, let me explain it properly. Now, first off, you find out the invoice. You verify the invoice, whether item supply is taxable. Obviously, it is subject to RCM, it is subject to tax, so definitely it is taxable supply. Whether it is expenditure item, yes, yes, it is an expenditure, it is not a purchase. Then it is to be reported in 44, clause 44. Thereafter, question arrives. First of all, you have to report in column 2. Total में तो count कर लो. Thereafter, question will arise whether it is registered, unregistered. Unregistered, then column 7. Registered, then column 3, 4, 5, etc.
sir,
Now it will come in column 5 because it is not composition, it is not exempt. So it will come in column 5. Obviously, it is taxable supply, it is a supply. But it is an expenditure item, must be. So answer is yes, it is to be reported because it is expenditure item.
sir,
Yes, question.
in case of financial institutions, what
Yes.
about the provisions of BDDR and standard asset provision? Do we
I-
have to consider
I
that?
did not follow financial.
Financial institutions, we make provisions on BDDR and standard asset.
PTTR means what?
BDDR. NPA provision,
NPA?
yeah,
Okay, means
Yeah.
what? Clearly
we
explain.
create provision
Uh-huh.
for NPA and
Okay.
standard assets.
Okay, bad debt.
Huh,
So bad debt is not a supply of goods or supply of service.
okay.
It is not an
No,
expenditure
not
item.
bad debt, sir. We
It is a provision.
yes, but we have to create those provision as per the statute.
So it is not to be considered,
Okay.
definitely.
Thank you.
The reason is that it is not an see, we have already considered once. So when we provide the loan, first assessee will provide the loan. There are on which he will get interest. So interest is considered as an income item. So it is considered income hai, okay, nahi dikhane ka hai. Then then it become bad debt. So you saw it in bad debt as an expenditure item. Now bad debt is not obtaining any service or goods. It is not a goods, it is not a service. It is just a bad debt. So neither it is receiving of service. So it is not to be considered, definitely. Even sometimes goods, you provide the goods and thereafter you don't receive the money. So that is also a bad debt. So that is also not to be considered. Financial bad debt, financial loss. Yes.
Yeah, sir, in case of a big companies, where sometimes the accounting system doesn't give a report with regard to whether the particular expenditure is coming under GST, non-GST, and whether it is under composition.
The
scheme.
proper segregation is not
The
made.
proper segregation is not available. So is it possible to give a disclaimer clause?
Means as far as possible, you avoid such a note that since detail is not provided by the company, so we are not able to provide under clause 44. So as far as possible, you try. See, you need not have to be perfect, like 100% perfect like Amir Khan. It is very, very difficult to give the 100% perfect figure, but you arrive at some nearly perfect figure and provide the information. And you
thank
put a note something related to that. Because very much perfection is never possible. I give you an example. Now, one clause is registered and unregistered. You have to segregate. Now, whether a particular purchase, on the purchase, GST number is mentioned. So we feel that it is registered. But you go to the GST website, you find that, arey, ye to number cancel ho gaya. Now, GST law is very stringent, very, very stringent. You must pay the tax before filing the return. If you don't pay the tax, system will not accept the return at all. So without payment of tax, so in India, see 10, 20, 25% people don't have money to pay the tax. They don't give priority to GST payment first. See, what is the system in our Indian culture? Indian culture में ऐसा है कि शादी में जाएंगे, then sometimes they said नहीं, funeral में तो जाना चाहिए, भले शादी में नहीं जाए, funeral तो जाना ही चाहिए. So जो सामाजिक है, that is given the top priority. Now when you go to America, the government payment or accounts are given the topmost priority. If somebody is expired, तो उसको आइस में डाल के साइड पे रख दो, सैटरडे को देखेंगे, संडे को देखेंगे. So the accounting and government payment is given the top priority, whereas in India, accounting and concept or tax payment is given the last priority or maybe second last priority. So they don't make the payment. They are not able to make the payment. So return is not filed. Now law says that if you don't file 3 consecutive return, now if you don't file the return, first return, then you can't file the subsequent return also. If previous return is not filed, subsequent also return will not be filed till the previous return is filed. And if 3 consecutive returns are not filed, number will get cancelled automatically. System itself will cancel the return without giving so cause notice. Law says that number will be cancelled without so cause notice. Then there are procedures are given. Then immediately within 1 month, as soon as the number is cancelled, within 1 month, you pay the tax and you apply for restoration of number. So once the number is restored, you already paid the tax before restoration, application restoration, you will file the return immediately and your number will be restored. Now, if you don't apply within 1 month for restoration, then another one more possibility is that you file an appeal within 90 days or 3 months or 90 days, you file an appeal. An appellate officer has no power or is simply, see what appellate officer will do if you apply for restoration of number, you file an appeal. He has not much power. He cannot reject your application. He will say only one thing. You pay the tax, I will send the file back to the officer for restoration of number. That's all. So you pay the tax, you approach the appellate officer for restoration again, and he will restore the number. And if you don't pay the tax, then appellate officer cannot instruct the lower authority to restore the number without payment of tax. So these things keep on going. So when your article will audit, he will find that yes, he is unregistered, he will put in register. When you go for final to number hai iska, you put in registered instead of registered. That process will keep on going. So 100% perfection is difficult. Credit is blocked, but it is registered. So yes, sir, expenses. You have to consider expenses. You have to consider for clause 44. So input credit taken, not taken, block credit, you did not think. You think whether it is an expenditure, answer is yes, then you claim the input credit. Depreciation or financial expenses or bad debt, these are not service taken for which you have made payment. So not to be considered. Bad debt is not a taken, service taken. Bank charges, yes, it is a service taken. Bank has provided some service for which is charged and you are paid. Actually, bank bina service provide ke bhi charge lagate, that is different thing. But under GST law, it is considered bank has provided service and for which it has charged. So that is the bank charges are subject to tax, and we can claim ITC also. We have to be extra careful to see that bank is, while filing the return, R1 return, it is submitting your GST number, you will get the credit. So bank charges, yes, service taken, it is an expenditure item, and clause 44, yes, consider. That bank has bank charges lagaya, GST lagaya, but while filing the return, bank charges, bank wale ne aapka GST number, suppose it did not put, so you could not claim the credit. So आप confuse मत होना कि यार ये तो credit नहीं मिला, दिखाया नहीं, so it is not an expenditure for 4480. No. It is an expenditure 4480 and you are debited to profit or loss account. And it is registered, unregistered में मत डालना, because all the banks will have registration number, GST number, local GST number or interstate GST number. Then there is one heading, activities or transactions which shall be treated neither supply of goods nor supply of service. So certain exclusions for clause 44. What are those exclusions? I have given only few expenses, common expenses. There are long list, but few are common for our tax audit purpose. One is service provided by employee to employer. So it is to be excluded. Salary is to be excluded. Suppose tomorrow law is changed. Kanun hai change ho sakta hai. Suppose tomorrow law is changed. And law says that, GST law says that service provided by employee to employee, it is a service. And it will be subject to RCM. Then what will happen? So every employer will pay RCM. Employee will not take the GST number, but employer will take employer already have the GST number. So every employer, every salary, wages debited, every bonus debited will offer RCM and again will claim the input credit of RCM because it is used for the business purpose. So all RCM, whatever RCM, few exceptions, some full RCM, some partial RCM item, all RCM generally we debit and generally we claim expense because it is used for the business purpose in the course of business. So tomorrow it may happen that if this particular clause is removed, excluded, taken out from GST law, then every salary will become RCM service, will taxable service, and it will form a part of your 44, clause number 44. But right now, it is not forming a part of 44. Pardon? Doctor means this 44 AD clause, 44 clause. Yes, if doctor is subject to audit, tax audit, then yes, answer is yes. जो भी expenses है debit में, you have to consider for 44. It will be difficult, but it is to be considered. Books of account, I don't know how best quality doctor might be providing to you, but it is to be considered. Their services given by the court or tribunal is to be excluded. Now, sometimes when we file the appeal before the tribunal, income tax or GST, we pay some fees, appeal fees. So that is not to be considered because it is not a services. Even in other courts also, other than taxation, sometimes we pay. Suppose you file a claim against anybody, check bouncing, etc., then certain 2.5% fees is payable. So that fees will not form a part of for clause number 44 because it is mentioned in the GST law. Then functions performed by the member of parliament, etc., not to be considered. Services of funeral services are to be excluded. We may come across some tax audit where funeral expenses might have been debited. Partner expire हो गया, funeral डाल दिया. So those not to be considered as a service exempt. Right? Then sale of land and sale of building, strictly land and building, ready land and ready possession of flat shop. It is not to be considered 44 AD because not liable for GST. Actionable claim is also not to be considered except the lottery, betting and gambling. Now, what is actionable claim? Some of you may not be aware what is actionable claim. I'll give the example, one example. Suppose you have taken the insurance policy and paid the insurance premium. So insurance premium, yes, 44 में आएगा. Insurance company will charge GST and it form a part of 44, clause 44. If it is debited to business and used for business purpose. And suppose something happens and you file a claim to the insurance company, so that an insurance company will give you compensation, the loss by fire or etc. anything. So once you file the claim before the insurance company, that is called actionable claim. A claim on which insurance company will take some action. So actionable claim is an income. It is not an expenditure. But for insurance company, it is an expenditure, will form a part of 44. So actionable claim is to be considered. Sorry, actionable claim is not to be considered for the SSE, who filed the claim. But for insurance company, it is 44 item. Then supply of goods from a non-taxable territory. Now entire India, including state of Jammu and Kashmir, everything is territory. But there are few non-territory. Suppose you are in India and buying goods from Paris and directly delivering goods to USA without goods coming into the Indian custom water. So that is called non-territory. So that is not to be considered. Even it is a supply, not to be considered for 44. Then supply of warehouse goods. Now, item number 8, B, C, D, etc. has to be considered together. Actually, it is a purchase of goods. So there may be certain expenses involved in it, but it is a purchase of goods not to be considered otherwise also. I'll tell you what is that. Supply of warehouse goods to any person before clearance for home consumption, then one is 8B. Next item is supply of goods by the consignor to any other person by endorsement or document of title to goods. So document of title to goods are transferred, not the goods. After the goods have dispatched from the port of original to outside India, but before the clearance for home consumption. That is called high sea sale. Actually, it is a purchase, but still it is called high sea sale. I don't know why such purchase is called high sea sale instead of high sea purchase. Maybe English is a funny language. But high sea sale purchase. Now, what is high sea sales? Now, suppose you purchase a goods from other country and it is imported. So what will happen? When the goods are imported into India, you will go to the custom department and will submit bill of entry. You mention all the details of the goods because you have already received bill of lading from your supplier. So bill of lading में सब detail है वहां से जो माल निकला. So based on that you will fill the bill of entry and will submit the detail. So custom department verify name of the goods, HSN, quality, quantity, rate, etc., tax rate, and if everything is all right and custom department has no doubt, like okay, you pay this much amount. In window में जाके पैसा भर दो IGST and custom duty. You make the custom duty payment, so the पावती and goods are available to you for clearance. So आप goods का possession लिया और आ गए घर पे. So it is called import of goods. Now suppose it may happen that you have imported the goods and before the goods come into Indian water, Indian territorial water, certain nautical miles. So before the goods come into Indian territory, you sold the goods. माल आने से पहले ही बेच दिया और आपको कोई कस्टमर मिल गया and he has purchased the goods without verifying. So it happens. Practically it happens. So what you will sell? You will transfer the document of title to goods. जो bill of lading आया था आपके पास उसको दे दिया endorsement करके. So person who has purchased the goods from you without taking delivery. So that third person will go to the custom department and will present the bill of entry. You will not present, he will present. He will pay the custom duty and he will clear the goods by paying the duty and it becomes his goods. So for you, what will happen? It is high sea purchase and high sea sale. You import the goods, it is called direct import. You sold the goods on high sea purchase, it is sale of goods. Without dispatching the goods, without delivering goods, just by transfer of document. So such high sea sale transaction is not a sale under the GST Act, not required to be shown in the GST return at all. There is no column in the GST return for showing such high sea sale transaction. It is not a sale. So GST department has no power to levy IGST or custom duty to you. GST department will levy GST, custom department will levy custom duty, but it will be levied on that person who has purchased the goods from you and cleared the goods. But you as a second party, middleman party are not liable to pay GST or custom duty. So for you, your sale is high sea sales. No, purchase is actually it is a purchase, not required to be. Expenses debited to PL, it is okay. But direct purchase should not be reported. Any expenses? Yes, yes. I firmly believe we don't show purchase of goods. Expenditure relating to goods and services, yes, but not the purchase of goods. Yes. No. You purchase the goods and you incur some transport charges. So those transport charges are required to be reported because it is an expenses item. So expenses item debited to PL, yes. Expenses item, yes, yes. Yes, if it is debited to PL account. It is reported in the books of account. Yes, answer is yes. Raw material or purchase, no. Purchase of goods for trading purpose, manufacturing, for trading item. So it is not required to be reported, definitely. No, definitely no. there may be some expenses which are debited to trading account. Some expenses, maybe direct expenses, that is to be reported. Some expenses shown are some expenses are capitalized in the along with the purchase of capital. Those are to be reported. Expenses are to be reported. Expenditure, not expenses. Now allowances. Allowances are not to be reported because these are just allowances. That we have not received any service or any goods, particularly allowances are given for services. So we give various allowances to the employee, HR allowances or traveling allowance or conveyance allowance, etc. These are not the actual expenses incurred. These are just the allowances given to the employee. So we have not received services. So allowances are not to be reported because it is not backed by any service or purchase of goods. Then items which are not in the nature of expenses or items which are not in the nature of supplies are not to be reported. So allowances are not supplies. Now provisions and accrued expenses. So there are certain provisions and sometimes there are maybe expenses are already incurred and shown in the balance sheet item. As suppose when we finalize the books of account in the month of March, so electricity bill or telephone bill is not available. But subsequently in the month of April, it is available, made available, dated April. So, but it is relating to March, so we show as an accrued expenses. So such accrued expenses, these are real expenses and which are paid subsequently. So such expenses, accrued expenses are required to be shown in 44 because it is already shown in the balance sheet instead of profit and loss account or maybe debited and shown provision shown in the balance sheet. So such accrued expenses are required to be shown in 44. But there are certain provisions which are not actual. See, payment to auditor. Now payment to auditor, it may happen that we show in the balance sheet that we are making this much amount as a provision for audit fees. But practically actually what might have taken, what might have happened, auditor खुद ही appoint नहीं हुआ है तो किसके नाम पे TDS pay करूं? So these are just provisions. So provisions for which we have not taken the services, so which are need not be considered because when auditor name is not available, GST number is not available, then we cannot consider in 44. So provisions, if not available, then need not be required. Accrued, yes, accrued expenses are already incurred, already liabilities arised, which is just paid subsequently. So it is to be considered under 44 clause. Some examples are given, provisions and accrued expenses. Provisions for warranties. Now, when we sell the goods, we give 1 year warranty. We don't know whether a contingency will arise and whether claim will come from the customer or not. But still we know by the past event कि certain expenses should be reserved. इतने तो क्लेम आते हैं जनरली, जैसे बैंक थोड़े पैसे रखते हैं कभी भी कोई भी विड्रॉ करने आएगा. Like by experience we, so these are just provisions only. So it is not to be considered for 44. Provision for gratuity, etc. It is not to be considered. Then accrued expenses, audit fees. If auditor name, number, etc. before finalizing must be available, then you submit in 44. Electric, telephone, etc. It is available, then submit it. Then exempt versus non-taxable supply. Now there are certain supplies, where certain purchases which are exempt from payment of tax. So it is a goods, it is a service providing, but it is exempt under GST law. For example, health service is provided by the doctor, medical practitioner. It is a service, but it is exempt. So it is to be considered because it is a service. So consider 44 and exempt में दिखाओ. And certain non-taxable, I will give a couple of examples which are not to be considered. Reason it is not coming into the purview of GST. One is motor spirit. There are few items called motor spirit. One is crude oil. Crude oil is motor spirit, or petrol or diesel or ATF,